What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at a company that we have never gone over on the channel, and that is ULTA Beauty. ULTA Beauty has some very interesting metrics and growth metrics around their return on capital and return on equity. And what I want to do is I want to take a look at those metrics. I want to compare them to other very large companies like Microsoft, Amazon, as well as some smaller companies, and really give a determination on where ULTA Beauty could be headed in the future. I also want to take a look at their EPS numbers because they have seen a tremendous amount of growth over the last couple of years, and their revenue. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Starting off, let's take a look at ULTA Beauty's chart. We can see over the last 5 years, they are up 45.5%. However, if we look year to date, this stock is down almost 12%, and from their all-time highs of around $550, we can see that this stock is down almost 25%. And I love this detail that Google added to these charts. We could see that back in May, they announced their earnings and they came out with some difficult guidance going forward around slowing growth from retailers. And this is the biggest reason that the stock is down. We could see that in that single day, it moved from $485 all the way down to the low 400s. And if we look at ULTA Beauty's website, we can see that they sell every type of beauty product you could imagine, whether it's makeup, skincare, hair, nails, and even some men's products. Not only does ULTA Beauty have an online presence, they also operate over 1,300 stores across all 50 states. And if you come on their website, you can see how many stores they have in each different state. In Texas, they have 126 locations. In California, 168. Florida, 92. New York, 55. If we look where I'm located in Iowa, they have 11 stores. So they have a number of stores across all the different states. Even in Alaska, they have 3 stores, and Hawaii, 4 stores. And across their website in over 1,300 stores, they offer more than 25,000 different products from over 600 established and up-and-coming brands. This also includes their own private label business, ULTA Beauty Collection. In the investing community, ULTA Beauty is most well known for their high returns on invested capital. Return on invested capital, or ROIC, is a calculation used to assess a company's efficiency at allocating the capital under its control. The formula involves dividing the net operating profit after tax by the invested capital. So why is this metric important? When we think about a business and what their ultimate goal is, it's to generate returns for the shareholders. And they do that through a number of different methods. Some of the most obvious ones are dividends and share buybacks. Those are two that investors pay a lot of attention to. However, you also have to keep in mind the metrics within the business that are generating growth and share appreciation, and ROIC is one of those metrics. So there are many different ways to actually look at returns on capital. There's ROIC, and then there's also return on capital employed, so ROCE. And the basic difference is how they are looking at earnings. One is before tax, one is after tax. And if we look at ROCE, we can actually see that ULTA Beauty comes in at 44% return on capital employed, which is a fantastic return, especially compared to the average for the industry, which is sitting at 13%. Again, a very similar metric is return on equity. I want to use this metric because I was able to find a lot of good graphs online comparing ULTA to Microsoft, Amazon, and even GameStop. So if we look at return on equity, we can see that it's calculated by dividing net income by shareholders' equity, and equity of shareholders is assets minus the total debt. And a higher return on equity speaks to how well a company's management team is generating income and growth from its total assets. Here we have a few different charts for ULTA Beauty. The first one on top is their net income. Then we have the shareholder equity and the return on equity on the bottom. And if we look at previously to 2020, they had a return on equity of around 35 to 40%. However, during 2020, they obviously had a huge drop off in terms of their net income. And that has to do with the shutting down of a lot of their stores due to the pandemic and everything that was going on at that time. However, since then, they have seen a tremendous return to net income where it has blown past previous highs all the way up to around $1.2 billion. Their equity is sitting around $2 billion, and their return on equity is at all-time highs of 65%. Here we have the same metrics, but for Microsoft. Again, net income on top, equity in the middle, and ROE on the bottom. And if we look at ROE for Microsoft, we can see that they have averaged anywhere from 40 to 50% over the last few years. years. So they are still below Ulta Beauty's return on equity. And here we have the same metrics for Amazon. We can see again, income on top, equity in the middle, and then ROE on the bottom. And they have been anywhere from around 15% all the way up to around 30% in terms of their ROE. However, over the last year, they dropped all the way down to -2%. And this really comes on the fact that their net income has dropped off in a massive way. A lot of people are expecting this to turn around, and we are kind of seeing that right now. But overall, if we look at their average, they're anywhere kind of around a 25 to 30% return on equity. The last comparison I had up here is GameStop, because if you think about GameStop and Ulta Beauty, they have very similar business models. They have physical retailer stores as well as an online presence. And if you really think about GameStop, it's more of kind of the male version of Ulta Beauty. So if we look at GameStop, we can see that over the last 2 to 3 years, they have had only negative ROEs. And that overall is driven by the fact that they have had negative net income over the last few years. And even previous to 2017, they only had ROEs of around 15 to 20%. So not very high even back in their glory days. So all this return on capital, return on equity, everything like that, what that is telling us about Ulta Beauty as a company is that the management team does a really good job of employing their capital to generate more returns for the business. And that capital efficiency is also reflected in their EPS numbers. We could see that prior to the pandemic, they were bringing in around $12.15 in trailing 12-month EPS. However, currently they are bringing in almost $25 in trailing 12-month earnings. And analysts for the current year expect them to break that $25 mark. An average EPS estimate for 2024 is $25.43, with a low estimate of $25.10 and a high estimate of $25.89. If we look at next year, we can see that analysts expect that growth to continue. They have an average estimate of $27.01. The low estimate is interestingly down to $24.25. However, the high estimate is all the way up at $28.27. And not only does this capital efficiency impact the bottom line, it also impacts the top line numbers. We can see that for their trailing 12-month revenue, they are currently sitting at around $10.7 billion. If we compare that to before the pandemic, they were sitting around $7.4 billion. So they have increased this number by almost 50% over the last 3 to 4 years. And in terms of valuation, Ulta Beauty is trading relatively low. We can see that their forward P ratio right now is sitting at a 16.47. Just a few months back, they were trading at almost a 22 forward P ratio. So personally, am I buying, holding, or selling any shares of Ulta Beauty? I don't actually have a position built out in this company. It is one that I've kept an eye on over the last few months because of their returns on invested capital. I think the management team has ran this company very, very well, especially in an environment that has been very difficult for retailers. So what I want to see from Ulta is the valuation potentially drop even further before I would invest in it. Because right now they are still sitting somewhat close to all-time highs. We can see again, all-time highs sitting around $550. I personally would like to see this stock below $350 before I would really consider adding it. And it would still be a question mark in my portfolio because I'm not super familiar with this business model and really how women feel about their overall makeup products. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.